on the SpaceX mega IPO with our panel of guests. Michael Monaghan is partner and portfolio manager of Founder ETFs, which operates actively managed investment funds focused exclusively on founder-led companies. And Dhruv, Maniktala, partner and CIO of True North Advisors, has a long-term private market exposure to SpaceX. Michael, let's start with you. You're the bull here. We have an ultra-rich valuation, yet we're expecting it to pop. I mean, why the optimism for you?
Look, it's got 3 or 4 businesses embedded inside of it that each could be a Fortune 50 to 100 company standing on alone. And I don't think I've ever seen a company growing this fast. For example, $18 billion in revenue ending last year, and they added $27 billion during the 2 or 3 week roadshow. I can't think of a single company in history that grew their revenues 2.5 times in the middle of the roadshow. Lots of long-term opportunities between Starlink, the growth in AI and data, and a very big defense business.
And of course, the valuation assumes perfection. Dhruv, you're the opposite. You're a seller, not a buyer. You say it is a one-way ticket to Mars.
Well, there's an ancient Chinese proverb that basically says, those who have knowledge don't try to predict, and those who predict don't have knowledge. So our first tranche in SpaceX was at a valuation of $33 billion. And so for us, we've already experienced a 50, 60x in our position. And so for us, in a private strategy, we just don't want to have public exposure. So it's not so much that I'm bearish, but it's not a great fit for us. And then it is priced to perfection, because to Michael's point, if you look at the metrics implied in the valuation, your satellite business has to grow by 10x over the next 10 years. Your launch business basically assumes that you would be having, not lunar colonies, but flights to moon pretty frequently. And then the AI business is really interesting because it's an amalgamation of XAI and Twitter, company formerly known as Twitter, together. And you would expect that to be up 200x in the next 10 years. So I think Elon Musk has done some great things. This is an inspirational, it's almost an event, like you said, in terms of the popcorn eating, etc. But it is priced to perfection.
But Dhruv, I mean, you can't use traditional valuation measures for a company that's looking to the future. These are, models which have yet to be proven, yes, but they also hold a lot of potential. Starlink, case in point.
100%, and I agree with that. I think it's not so much, so that's why I'm not talking about price to earnings or price to revenue. Let's just put that aside. I'm just talking about, look, if you expect the AI business for SpaceX to grow 100x in 10 years, and they can compete with Anthropic and OpenAI effectively. Right now, I'd put them at number 3 in that business, and they can keep up with the capex of 25 to 30 billion just to keep up from a cash flow perspective. Then yes, it's going to do all of those things and more. So from our standpoint, it's not that we are bearish. In fact, I would expect it to be up meaningfully, over in the short term. But it's just, I think we don't want to predict. We've made our, returns, and from our standpoint, we are more looking to exit at some point over the next year, I would say, rather than just hold on to it.
Right. Well, Michael, Dhruv said he's not buying into SpaceX's AI story. Let's take a look at the numbers. $3 billion revenue, $6 billion operating loss. It burns $2.5 billion every single quarter. It does look like it is a risky business. What do you see in that?
So we're buying it, and we remember that you look forward in valuing securities, especially growth securities. Looking forward, remember they just added $27 billion in revenue in the last 2 weeks, so they'll likely be cash flow and revenue positive for this year. And from a valuation perspective, we don't think it's as stretched as some of the naysayers have said. You can easily get, prior to Goldman and Morgan Stanley releasing their estimates, we were easily at $200 billion of total revenue for 2029, 2030, depending on how conservative you want to be. It looks like we think we can get to $50 billion in Starlink. We could get to 50 billion in defense. Remember, Elon has direct access to meet some of the United States Defense Department's most important goals. So we think 50 billion in revenue on the defense side isn't a stretch. And then the biggest factor for us that we were unsure of was data and AI. Well, with the 27 billion signed between Anthropic and Google, we were at 100 billion for 2029, 2030 revenues, and now that looks conservative. So at 200 billion of revenue, it's coming at 10 times sales. Talking to my peers, institutional money managers, most of them are using the Morgan Stanley numbers at 330 billion. So you're maybe coming at 5 or 6 times sales for a company that should eventually be able to deliver tokens at the lowest possible price and solve the energy, cooling, and siting issues into artificial intelligence and creating work through artificial intelligence. So we think, given it's going to be the low-cost provider in artificial intelligence and a sovereign AI closed network, we're very bullish on the stock. We'll be buying it on the open tomorrow, and we actually hope that folks are a little sanguine going into the open because it'll give us time to buy more stock.
The thing is, Michael, we're talking about an environment where people are already questioning the AI capex play and questioning whether or not we have a bubble on the brink of bursting. Shouldn't you perhaps hold back, see how it all pans out before jumping in?
So we've done a lot of work on this. I'd say I've probably done 200 hours of work between SpaceX and looking at about 6 to 7 major evolutionary technology changes. So we've not only looked at SpaceX and the opportunities at SpaceX, I've gone back and looked at changes like steam engine, electricity, internet, PC, mobile, and we've looked at what those adoption curves have been like and the growth that come from them. And certainly in any of these adoptions of these new technologies, you have high capex, but 3, 4, 5 years later, you have the productivity gains. And it ties into our thesis why we invest in founder-led companies. They have the vision to see where it's going, and they execute against it. And I don't think anyone has ever had a bigger vision than Elon and had the grit to bring those visions to reality. That's what we're banking on. And we don't think it's a stretch to get there by 2029, 2030 and really start putting up some high revenue growth.
Well, Dhruv, you say that, the reason why you're not really buying into SpaceX's AI story is that because it's lagging behind the likes of OpenAI and Anthropic, it cannot win. It can, right? I mean, as long as it takes a different path, maybe not software, but also perhaps a data-first ecosystem, that it can chart the way forward, correct?
Yeah, the compute infrastructure is the biggest story because I think if it can put up sort of data and bypass the whole sort of energy story in the US, then yes, absolutely, there's something there. But if you look at the revenue of 3.2 billion that you said, I think almost all of that, except for maybe 500,000, was coming from the advertising revenue from Twitter or from X as opposed to XAI. There has been contracts signed with Alphabet of about 15 billion a year in terms of just providing compute, but it is a little ironic that your biggest check so far is coming from your biggest competitor. So, at some point, if SpaceX becomes enough of a threat, there is competition. Look, this path for SpaceX assumes there's no competition. We live in a highly competitive world. There are going to be players where nationally subsidized launch companies that are not going to let an American company just go and take the entire market share. So again, it does not imply that SpaceX is not going to be successful. It just means it's not just a given, as some may assume.
Michael, how are you looking at the company's profitability? I mean, some say that Starlink's massive profit will be gobbled up by, its AI investments.
So that certainly hasn't been the case over the last several weeks. Again, Starlink's been highly profitable. It'll likely be more highly profitable as they're able to get more bandwidth into space at a lower launch cost. I think we'll see an order of magnitude change on reducing launch cost and increasing bandwidth as we move from V2 to V3 satellites and fly on Starship. That's number one. And then number two, again, I would gently guide folks to the fact that rather than their AI business be money losing, Elon, again, this founder vision, he saw ahead of everyone else. He built Colossus 1 and Colossus 2. He executed. He built them faster than any data centers have ever been built before. He was ahead of the crowd. He had excess compute that he was able to sell into the market. And so he's taken a business that the naysayers thought was money losing and has turned it into money profitable. That 27 billion of revenue, 15 billion from Anthropic and 12 billion from Google, is likely 60, 70% EBITDA margin business. So it's not a story of losing money. It's a story of taking compute that he built first through vision, grit, and execution and turning it into cash flow.
Dhruv, you're nodding. You're agreeing?
Yeah, I mean, I think there are positives. I mean, I don't think the world is stupid. Like, if no one comes out with a $1.8 trillion IPO, if there isn't some truth to that. So it is. I'm just trying to frame this in a way that, look, if you assume that 100x on revenue in the next 10 years, or SpaceX as a company growing by 30x in the next 4 years, it seems reasonable, then it's a great investment. Then you should do it. And if you think there are roadblocks to that, if there's going to be a competitive friction to get there, then you probably shouldn't. So there is truth to it. So that's kind of part of and I think the supply-demand story is also not super negative in terms of just demand for shares over the next year or so. So there are definitely some positive aspects to that.
How about in terms of founder risk? Yes, Elon Musk is a visionary. He is, a leader that's hard to find, some say, in terms of just the vision alone. But there's also founder risk. He holds 80% of the voting power right there, and he is a man involved in several enterprises. So how are you assessing that founder risk, Dhruv?
Yeah, I have a problem with that. I think, look, I don't care what kind of a visionary you are, you do need some checks and balances. So to the extent you have 80% of basically the voting rights means no shareholder can ever really affect any change if something goes off track. And so you do see with visionaries, and it's as much of a gift as a curse, which is if they are bought into a certain vision, then they will go to the ends of the earth, so to speak, and to go and fulfill their vision. So does that mean pursuing more money-losing businesses because of just the vision? Sometimes a little bit of a rational reality check also helps. If you look at the case of Alphabet, founder-led company, amazing business, but it caught on and did really well when it got real operating expertise with Eric Schmidt and now Sundar Pichai coming in as a CEO and have some professionalization behind the business. So there is a nice balance there that would be nice to have. I just don't see Musk ever giving it up. So it's a little bit of an issue for me personally.
Is it an issue for you, Michael?
It's absolutely not an issue for us. The biggest companies have been built by strong-willed visionaries, whether it was Steve Jobs at Apple, Jensen at NVIDIA, and it's going to be Elon at SpaceX. As a shareholder, we have a remedy if we don't like where the company's going. It's a public stock. We can simply sell it. So I think these board concerns are overdone, and we would actually point to a contra-example. We think that Daria at Uber is one of the best board-hired public company CEOs, but I would posit that if Mr. Kalanick was still running the company, it'd be worth $1 trillion. So the board of directors caused the other shareholders probably to miss out on $900 billion. So I'm not concerned about the best visionary with the most grit and the best execution costing shareholders money. I would be concerned about a board making a mistake that could impair my value. So I'm very happy with the structure of the voting.
Dhruv, do you think this is a stock that's going to be volatile? I mean, it is pretty much a thin float. The risk of it spiking is really high.
Yeah, it probably would be, but at the end of the day, if you look at the index inclusion with Russell and NASDAQ both coming up within the next month, and NASDAQ being about 3 times float. So as you go through the lockup process, and probably a year or so down the road, you would have the S&P inclusion, which has, by some estimates, 10 to 20 trillion dollars of assets indexed to it. So inclusion into that is going to provide some potential headwinds. And if the insider lockup will expire roughly around the time of S&P 500 inclusion, or somehow the sales happen around that time, and I think they'll be intentional about this, you can have, given the thin float, I think it's probably a positive right now, not a negative.